credit scores. Not everybody has a perfect one. So let's talk about what happens if they call you and they're not quite where they should be.
Correct. First thing I would like to do is always make sure you contact your lender. We talked about this earlier. If you could avoid going out there, it'd be nice to know if you knew your credit score, but don't go out there and have someone pull your credit for you. Try to avoid some of those secondary credit, reports like a Credit Karma. I always tell people, annualcreditreport.com seems like a pretty good one because they're actually going to give a closer score to the three main credit bureaus than what a Credit Karma would. Contact your lender. We're going to be happy to go over your credit scores with you and talk to you about things how to fix it, how to get to where we need to be, things that are out there on your credit that you may not know about that we can kind of talk to you about how to get taken care of and get those removed off your credit report.
So there are times whenever they could have a judgment held against them and still close on a house. Is that correct?
Technically, no. When it comes with a judgment, we would have to make sure those are satisfied. We can't move on with the title work with a judgment that's out there and still active.
And the difference between judgment and collections?
The difference between the collections and the judgment is, one's obviously filed with the courthouse, with the county, where your collection's not. They're both going to hurt your credit about equal amounts. But one of them we're going to have taken care of. One of them not necessarily. Just kind of depending on the loan amount. We'd like to see that if anything over $1,000, we're going to want to have taken care of before we can even move forward with the loan.
And oftentimes you can settle it up at closing, right?
Correct. We can put that in, when you're paying it off. We just got to get the right documentation saying that you've had this taken care of.
Okay. So if someone comes to you and their credit score is not great, what kind of system do you set them up on?
So what I would do is I usually go over with the current, with the borrowers in regards to their credit. I tell them, necessarily what's the first things that we want to do. If you have the collections out there, take care of those first. Those are the ones that we know that are bringing down your score. Then you have your things. If you have 30 days late, 60 days late, and 90 days late, we'll kind of give you an idea of what to do. Obviously just keep making your payment on time. There's some things that we can control. There's some things that we can't control. But we want to make sure that the things that we can control, we'll let you know that the path of least resistance to get that score to where we need to be to get you qualified for the mortgage.
And if you filed for bankruptcy?
If you file for bankruptcy, we're probably going to have to go with one of the government processes of a VA or an FHA loan. Just because you filed for a bankruptcy doesn't mean that you cannot ever get pre-approved for a mortgage again. If you're in the process of filing for a bankruptcy and it has not been discharged yet, we can't even take an application. But after the discharge date, 2-3 years, depending on what was all in the bankruptcy, we can get you qualified again to get yourself a mortgage, more or less probably with an FHA mortgage.
So if you filed for bankruptcy, is it correct that as long as you make other payments on time and you keep your credit, you can start rebuilding your credit?
Correct.
So don't just think, well, I filed bankruptcy, end of the world, never going to buy a house again, so what do I care if I pay my bills on time? You actually should care, as long as you keep those others that are outside of the bankruptcy on track, and whatever, if you do Chapter 11, you have to make your payments, obviously, but keeping those on track and getting your credit score back up, that's going to make you eligible for a loan a lot faster. So if you've been foreclosed on, we're going to be talking about that in the next segment.